Hello, everybody, and welcome to the Monday Open, hosted by the Vantage private client team. My name is Ollie, and joining me today we've got Steve. How you doing, Steve?
I'm good, Ollie, especially after all of our teams winning. But today also feels like we're playing deal or no deal, as we'll go into a little bit further.
Oh, mate, honestly, flip a coin and you could probably guess what he's doing. It's about the same odds. But anyway, just to tuck into that one, though. So, starting off on your guys' screen, you will see the agenda for the video ahead. It's all be quite familiar for our returning viewers, so I won't spend too much time going into that. But just to reiterate to everybody that any advice that we discuss in this is general in nature and doesn't take into account your circumstances. Any projections made are not guaranteed, and previous price action will not always be a reliable indicator for future performance. So, now moving into last week, well, we'll start off with the top 10 traded products from last week. I actually did find it very interesting. We don't have any oil markets into the top 10, but I suppose the volatility is probably scaring a few people off. But what do you think, Steve?
Yeah, actually not too surprised, obviously, with the oil, dropping quite a bit over last week, and then really the indices kind of set several new time highs. So not surprised that that's been knocked out. But I guess we'll go on to last week. A lot of news that we need to probably dissect. We'll try to keep it very short when it comes to last week. But we had the local sort of data. So Aussie unemployment rate came out actually 4.3. So we saw basically the employment increase by 17,900 people, as well as unemployment decreased by 3,700. So we actually saw the Aussie, the actual price movement. Break that 72 cents mark. That was also including with the optimism around the ceasefire deal being reached. Obviously, that's a bit different today, but we'll go into it a little bit further. We also need to be conscious that with this sort of unemployment data, it was actually conducted in the first half of March, so it's really too early to see what the impacts are when it comes to the war, especially on the labour market. But also deep diving into the employment, we actually saw full-time workers, which rose by 53,000 people, which was partly offset by a fall in part-time employment of 35,000. So we actually have got Westpac economists has actually expected unemployment rate to actually rise to an average of around 4.9% this year, while CBA has actually expected the unemployment rate to peak at 4.7 in late 2027. We also saw the China data. The China data very mixed. The imports obviously set a new record when it comes to China, so it does appear that a lot more countries really focusing on looking at China when it comes to the sort of imports. They're probably drifting away from the likes of the US, for example. Probably no surprise when it comes to that. We also saw the retail sales being very much lower than expected. So the economy overall, we did see a mix with the GDP. So GDP was actually better than expected. Obviously, with those sort of numbers when it comes to the imports. The exports also was also lower than expected, but that's also because they were also not exporting probably as much oil since they were keeping it, I guess, in house. But the unemployment rate was marking a 13-month high and really reflecting that sort of pressure on the job market. We did see the UK GDP data coming better than coming. So it was. We'll obviously have a few bit of commentary in regards to that when it comes to the central bank speeches, as well as the eurozone. The US data better than expected when it comes to the Philly manufacturing index, which is more one of the sort of the lower, not the main sort of headlines, but one of a good sort of indicator. The sort of jobless claims coming in less than expected, but the continuing also struggling. But the PPI also coming in lower than expected. But yeah, the IMF meetings as well as central bank speeches. I know you've been keeping an eye on that. What's your thoughts, Ollie?
Well, for the IMF, I mean, not to the surprise of not too many, I would hope, but it's inflation central, right? Everyone's looking, try to get a bit of a clear pathway for what's going to happen with the inflation situation, especially with the energy crisis ongoing. The key standout for me from the IMF meetings was that the IMF did comment that the BOJ is very well positioned to tackle the inflation headwinds, which could be coming. So it did somewhat ease expectations that the BOJ will be moving rates. That did also push the Nikkei up to an all-time high, but we'll focus more on the Nikkei in the technicals. Interesting to see. I do think the BOJ particularly is on a knife edge, but going into the central bank speeches as well, notably it saw the ECB president Lagarde did kind of ease off expectations for a rate hike later this month, I believe. So they're looking for a hold in April, waiting to get the full scope of what's going to happen with the inflation situation. There's a bit of uncertainty in there, but overall, it looks like everybody's called the Jets. RBNZ, I know they are looking pretty firmly for further rate hikes if they need. The SNB and the Bank of England are probably more of a wait and see, but going further down into the key notables, as Steve mentioned, the Aussie USD breaking over 72 cents and some other, very flip-floppy headlines in regards to the war. So I can't say it really gave us too much of a clear direction going off. But
Yeah, no, I mean, just with that, when it comes to the war, obviously the optimism around the sort of ceasefire deal saw the NASDAQ, the S&P 500, as well as the Nikkei actually hit all-time highs. Obviously, that's reverse ever since when it comes to sentiment, but yeah, the Aussie breaking that sort of 72 cents and then
it's a good
now
time to go on
down to,
holiday.
yeah. But yeah, we've kind of seen obviously the Israel and Lebanon agreed to a ceasefire. The Strait of Hormuz reopened temporarily, probably for a couple of days, and then it's closed down. So it's let a few sort of ships through. But again, we're probably at deja vu. We're seeing the same thing. So it's a case of deal or no deal. We don't know what's going to exactly happen, but it's a perfect segue to this week. So with this week, obviously the headlines is really the breaking headlines. Trump's already said through X or through social media, basically that there needs to be a deal, probably made by this Wednesday. Otherwise, his threats is basically to bomb everything. So again, we'll see whether that prevails. We just don't know what's going to come out there. But yeah, a lot of the themes when it comes to this week is, we've seen those sort of markets also gap, considering this sort of news. So we saw the likes of gold, for example. It was close to that sort of 4.9 on Friday, and then now it's kind of gapped down, and it's around that sort of 4,800 level when it comes to USD. We've obviously seen oil it gap quite significantly, as well as a lot of other sort of markets. So we saw the likes of the Aussie. It's kind of recovered now a little bit, but we are seeing a lot of volatility, obviously based off those sort of headlines. A lot of the sort of economic data we'll kind of see a lot around the PMIs. So purchase managing index, so the likes of Australia, the likes of the Eurozone, UK, as well as the US, as well as Japan. So that'll be key to see how businesses are going, and the sort of sentiment around that. We do see the China, so People Bank of China is PBOC, the actual rates. So that's basically their sort of interest rates. We are looking at the sort of CPI to see with the sort of inflation around New Zealand, UK, as well as Canada. So it'll be interesting to see with those. We do have also the UK as well as US when it comes to retail sales. So I think it all ties into really just looking at the sentiment, especially around the business, the inflation, which will be an early sort of indicator. But yeah, it could be one of those things where, other than the recent sort of headlines around the war, basically, if it's going to be a bad sort of outcome when it comes to those sort of results, it's almost going to be doubling bad sort of results. Otherwise, it's going to be mixed volatility if it's a positive, outcome. So
Makes
there's a
sense.
lot
But
of
I'd say for the retail sales in particular, I think it's going to give us a bit more of an indication of what I guess the overall sentiment's looking like. If you see a drop off, it's probably showing a bit of a contraction in economic activity. And then coupled alongside the CPI, it could give a pretty clear pathway for the central banks, which could weigh further. But as you say, very risk on, risk off flows.
yeah, no, perfect point.
All right, lovely. So moving now into the technical section. So let me share my screen with everybody. Gave a little preview in the week ahead, also last week's section about the first market, but I wanted to touch on the Nikkei 225 or the Japanese index, otherwise as it's known, coming off all-time highs last week. So I thought it'd be a good time to take a look, see where we could be going. So overall picture for the Nikkei has been very bullish since April last year, 2025. That was very well documented off the back of those tariffs. And we've seen prices very much overextended past the 20-week moving average, briefly touching on an all-time high just shy of 60,000 in late February before selling off to find support just below its 20-week moving average, but still above the psychologically significant 50K price point. And since there, it's been very blue skies. We've seen three very strong bullish candles since, closing out Friday with an all-time high after breaking just above the 60,000 level. Looking on our indicators here, we can see that the MACD was trading below its signal, but is now ready to cross over on its signal line. So if I'm adding to the bullish pressure or wanting to confirm the bullish momentum that we have seen previously, I'd like to see a clear break and some divergence on this. But similarly, though, I'm also conscious that the RSI is drifting very close to the overbought area. So if we do see some divergence on the MACD, we could see simultaneously this drift into the overbought, which can historically lead to a pullback on price. So I'm looking to see what we're looking for the week ahead, see if a retest and an extension of the all-time highs is likely, or if we're going to see prices pull back to trade back into the moving averages. Adding to the bullish momentum, we can see all of our moving averages are all fanned out, evenly spaced, all pointing in the same direction. So I do think we need to move into the daily chart to get a bit of a better understanding of what we could see for the week ahead. Referring back to the indicators again, we can see that the MACD has created some divergence from its signal line after going on a pretty bullish run as of the start of this month now. But similarly, though, we're seeing the RSI angling down towards its signal. So again, I'm looking for these two to ideally be looking to face the same direction, potentially mirroring each other as well to add to the pressure. We're seeing the 20-day moving average has dipped down below and crossed back up again over its 50-day moving average, telling me there is some bullish momentum still very much in play. For the session today, though, Steve, as you mentioned, prices did gap lower at the start of the week, and we're actually right now trading pretty much around where we opened after dropping off about 1.4% on the day so far. So if I am a buyer in this market, first of all, I would like to see prices break above this 60,000 level and hold there as well. So it'd be something like this. I'd look for prices to break and hold above, come down to find support, consolidate around this level before then pushing on to make a higher high. It'd be something to do like that almost. Similarly, though, if the prices are looking to hold around that 60,000, I will be looking for selling opportunities as well if this resistance level does hold. It does also look like a bit of a double top, so we could see this happen as a bit of a pullback into the price. So we could see it come up here and then trade a bit lower. Similarly, though, we could also just see the prices fall off on the week. If we do see a break below last week's lows as well, I do think we'll be seeing a fair big push back down into the moving averages. So the next market I did want to take a look at is the pound against the Aussie dollar. I'll move this back onto the weekly chart as well. Pretty much the complete inverse of the Nikkei. We're in a very strong downtrend since April. I can see that is signified by a very strong sequence of lower lows and lower highs. For where price is sitting now, we are quite overextended past the moving averages, but I am seeing the 20-week moving average has crossed over the 50, 100, and 200, which is adding a lot to the bearish pressure. You can see similar for the 50-week crossing over the 100-week, so further adding to that. But looking down onto our RSI, we are seeing that prices historically have been quite oversold, particularly in March. Now, prices are currently sitting just above that oversold sort of area. So I am very conscious that any moves lower could push this into the oversold and we could see a bit of a pullback. Similarly, though, we see on the MACD that it is below its signal, but they have converged quite a bit. So I'm looking for confirmation to see if prices will break this support level around here and then push on to make a lower low, or if prices will hold this support around here and then trade back up and into the moving averages. Moving this now into the daily chart. Can see on Friday we did close out the week just above this support level around the 1.88 or about 1.875, that being. Started the week slightly higher, but we are down on the day so far. So if I'm a seller in this market, firstly, I'd like to see prices take out last week's lows, then with a target to push on the long-term support here from early March, and then with a target to move into a lower low on here. Otherwise, if I am looking for selling opportunities, but I'm expecting the prices to go up, I think as long as we can still add to the sequence of lower highs, so something lower than the 1.91 sort of area, find resistance, I do think the next target is to retest these swing lows with a push down to its next psychologically significant levels. On the other side of that, though, if I am looking for buying opportunities on here, first of all, I would like to see prices take out last week's highs, consolidate above this sort of level, and then with a target to push on to retest its most recent swing highs around that 1.936 sort of area. As well, for managing the risk, I've got some pretty clear levels. So if I am a seller, for example, once we do see a break below this, I'll be looking to manage my risk around this sort of area, previous support now acting as resistance. If I am a buyer as well, I'd probably be looking towards my moving average levels to manage that risk. Okay, so that brings us to the end of the technical section now. So now moving into the Q&As.
Yes, so question one, what are the US midterm elections? So the US midterm elections are national elections held every 4 years when it comes to halfway through a president's term. So unlike the presidential elections, they're basically determining the control of Congress, which is made up of the US House of Representatives as well as the US Senate. This is going to occur in November this year. So basically all 435 seats in the House are up for election, and about 1/3 of the 100 Senate seats are contested. So the real sort of consequence of this is that whoever has that sort of control helps when it comes to deciding the outcomes of any sort of Congress matters, which basically write the laws. And what this means for markets is that it may cause more volatile due to the uncertainty. Obviously, with the midterms approaching, a lot of the sort of policies that the likes of Trump has actually promised. He'll be trying to get that in to ensure that the voters, especially the sort of those like his policies and so forth, are actually, he's kept his word essentially. So there's going to be a lot of volatility. Be careful that these sort of markets, it's going to cause more volatility around these sort of times.
All right, thank you. I'll take for question two. So, what could happen if the US Fed loses its independence? So, I think for this question, it's first important to understand the importance of having Fed independence. That being that the independence of the Fed allows it to make the unpopular decisions, such as raising interest rates to ensure the long term stability of the economy and achieve its goals of low inflation and low unemployment. So, in a circumstance where the Fed loses its independence, it can increase political pressure to lower interest rates for short-term economic gains, as is often seen promised by campaigning political parties, and this can lead to a period of sustained high inflation, market instability, and reduced confidence in the USD. So, in turn, this can lead to higher bond yields, forcing longer-term interest rates higher and weakening the economy overall. Okay, so that brings us to the end of the video today. A recording of this will be uploaded on YouTube once we have concluded. As well, we will be posting a link to this in our VIP chat room as well as on Telegram. For anybody who's looking to get involved with the Monday Open and send through any questions, please feel free to do so through the VIP chat room or feel free to reach out to your relationship manager directly. All right, so thank you everybody for watching, and Steve, I'll see you later.
Thank you, Ollie, and enjoy your evening, everyone.